You're looking at a daily chart of the Nasdaq. Welcome to my weekly review. You can see that the Nasdaq has had a nice run in 2023 and is now run into a little bit of a problem, a little headache here, a little bump in the road. It made a high here on July 19th of 14,446 and is now corrected for the last 3 weeks. You can call this here a little bit of a digestion, a consolidation, back and fill, a pullback, whatever you want. It's correcting. I just, looking at 2000, prior bear markets in 2003 and 2009, when we emerged from some nasty bear markets, this is tracking very similar to the emergence from those bear markets. We had a nasty bear market in 2022. We came out of it, and now it's just consolidating gains, and it's very, in my opinion, which means nothing. Everybody's got an opinion, right? This is just a pullback within an uptrend. So what I want to do, and I can't speak for everybody, what I want to do is, when the market is uptrending and in this nice power trend, I want to step on the gas, right? And be fully invested. But when it comes back like this and starts pulling back, coincides with the summer and August and seasonality and all that, I want to get small. My position sizing is smaller. I'm trading much faster in and out because I just think that, in any stock with a profit, they're going to sell it, take those profits, and move on. And I don't want them to take my profits. They can have somebody else's. Anyway, this correction, in my opinion, is not going to last forever. I know it closed below the 50 for the first time, since March 11th. It's 1% below its 50, or 0.9%, essentially 1%. Yeah, this past week, it's 0.9% below the 50. So we can stay, a couple weeks below the 50. It's not the end of the world. What you need to do is, gather your watch list, be vigilant, have some dry powder. You should have already, ranked your stocks and sold the laggards and trimmed some of the leaders. As a swing trader and a trend trader, that's what I do. You could do whatever you want if you're a long-term position trader in something like NVDA. You're just going to hold on to that, and that's fine. Know who you are, know yourself, and you'll do a lot better in the stock market. But for me, the two criteria that equal success are the market direction, which was great, up until July 19th, and now not so good. The market direction and stock selection. So we're going to take a look at some stocks here. The target of this correction has been the AI stocks. Those stocks that go up a lot, well, they tend to have a lot of profits and they get sold off. It's like, earlier I said John Dillinger, the reason why he robbed banks is because that's where the money is. But, everybody has Chat GPT now, and they corrected me right away and said, that was Willie Sutton. Anyway, this is where the profits are. So that's why they're selling these stocks. They just got a little bit ahead of themselves, I guess you could say. Microsoft is a pretty expensive stock. Meta, same thing. Just taking profits in these things. NVIDIA is another one that a lot of people own, a lot of people like, and it's below the 50 now. Meta, what was it? Oh, AI. It's got AI in it. It's got to be an AI stock. Yeah, so they're just taking profits in these stocks that ran up a lot. Palantir is another one. Had a nice run. Anytime you go from 7 to 20, it's a three-bagger here. And so now it's closed below the 50, just taking profits because that's where the money is. I'm going to still say John Dillinger, even though you guys are going to correct me and say Willie Sutton is credited with it. Let's just say both of them said it. Anyway, those AI stocks, you got to be careful. Speaking of which, SMCI, this is one that I bought at 90. I've told you many times, bought it on the gap up here. And then again, on the NVIDIA report. So I had, a big position here, then add on, 1% and 2%. And so I had this large position going into earnings. I didn't want to hold it, sold a lot, 330, sold another lot at 350, but I had 10%. And a 10% position, going into earnings is still a big position. And a stock that goes down 20% on a 10% position, that's 2% of your portfolio. And even though the original lot was 90, I could have sold it at 350 and instead it's 270. it was a three bagger for me, but 2% of the portfolio still sucks. And right now, yeah, it was a good trade. Thank you. But I could have been a lot better trade. And now you can see this candle here, this inverted hammer. There's a lot of damage there below the 50, 29% off of its high. That's adios muchachos for me. If you guys want to hang on to that thing, go for it. But I am completely out. I still like the stock. I still think, it can go higher, but that's as Jim Morrison saying, this is the end, my friend, for me. Anyway, I'm going to move on because there's stocks that are doing well. I started with the bad stuff, all the selling, the profit taking, all the AI stocks being sold, but there are some stocks doing well out there. And I'm going to start with the building, construction, concrete, heavy construction. This group has been moving up rapidly, and STRL, Sterling Infrastructures, and one of the reasons why. It's a weekly review, so I'm going to look at the weekly chart, and you can see this nice consolidation here, moved up, consolidation again. This thing just powered out of a 3 weeks tight area. Looks real good. Speaking of power, PWR, Quanta Services, this is just lower left to upper right. I mean, if you've held this one, congratulations. You can see this one also had a 3 weeks tight recently. Looking at the last 3 weeks, it sold off a little bit, but anyway, made a high at 205 and still hanging at 200. So congrats to the longs there. That thing has done well. PRIM is another heavy construction stock that you can see these. I got to go to the weekly. It's a weekly review. Big consolidation here. Big ass. Oops, I didn't say that. Big handle here. And then just ripped out of there. Had a 3 weeks tight. And these things are trading tight. They're not real fast movers, but you could see here on the daily here, this pattern here is actually the handle on the weekly, and it's extended now. But I'm just showing these because there are pockets of strength here, and this is the HVAC stocks, Modine. They're in the building. AC. This one broke out of a base recently, and 2 weeks ago just gapped higher. This one's on my PEG list, 13% higher with 166% above average daily volume. And you could see the base, move up, base, and probably base again. But these are the ones that are showing strength. So that's why I'm showing them to you. These are not like stock setups. I'll get to that in a little bit. Another AC stock is Comfort Systems, and just a grind higher, another slow mover. This is a nice shakeout on this day. We've been seeing this a lot lately. So if you're staring at your computer and you see your stock go down, you freak out and you sell it, and then it just ramps right back up. Those are little air pockets you just got to ignore. Go golfing, hiking, fishing, swimming, do something, but don't sit there and watch your stocks tick for tick. This is Knife River, a building concrete cement stock that IPO'd recently, and it looks pretty good to me. It undercut the IPO price and then formed this little base, and very quickly, because it's only been trading since May 25th, but it's starting to handle out here, and a little pullback to the 10. Might want to take a swing at that one. And another one in the builder group is my favorite builder stock, is Builder First Source. This is a weekly review, so we'll look at the weekly, and that looks like power, right? Quanta, just like lower left to upper right. Since the COVID crash, this thing has been a monster. So it's gone from 10 to 147, a 15 bagger. So thank you very much. We'll take that all day long. Okay, that's enough of the building, construction, concrete. You get it, the infrastructure group. It's been showing well. And like I say, during corrections, then you have profits, they tend to take them. I'm going to go to the retail here. This is Celsius, had a nice earnings report and gapped higher. What I want this thing to do is trend higher and not just sit there and go sideways like it did last time. After it gapped higher, it just kind of went sideways for 3 months, and then it gaps up. If it's going to sit there at 175 for 3 months, it's dead money. This thing needs to trend higher. These moving averages need to start trending higher, and this thing needs to start trading towards 200. But we'll see. Take it one day at a time. ELF is another one. gapped up on earnings, and now it's forming the little elf likes to form these little shelves here. But if you look at the weekly, this thing is just a powerhouse. Has not formed a base since last summer, and you can see the stair stepper type of action here in the weekly, as elf likes to gap up, then go sideways, kind of like what Celsius has been doing. Gap up, go sideways, gap up, go sideways. This one trended higher a little bit, then it gapped up, went sideways, and now once again it's gapped higher. I heard somebody say that, it can only gap up 3 times on earnings. No, they can gap up for a long, long time. As long as they're taking market share, got sales and earnings growth that are, strong. This thing is a monster, and it can continue on. As long as it's taking market share. So I wouldn't give up on that one. I don't see any sell signs unless, you like selling into strength and you sell these spikes here, which is fine. Whatever your style is, you do whatever you want. Lululemon, this is a stock that I like. You can see it's a really sloppy chart here as it just crashed hard and then ramped right back up. And that's tough if you're selling here and then a day later you sell at 326 and a day later it's 386. But it's kind of consolidated here kind of nicely in this little area, and they have earnings on August 31st, so maybe it'll just trade tight until it gets that catalyst. But it's definitely one that I'm watching and one that I like in the retail space. Okay, I'm going to move on to the drugs. I haven't talked about drugs for a long time because they've been in the dumps. If you look at the XBI, that thing is just well, since I mentioned it, better bring it up. XBI, Marty. Yeah, I mean, as the market rallied, in April, May, June, July, this thing just has been doing nothing. In fact, it's been selling off. And so I haven't mentioned the drug stocks, but Lilly last week had a awesome report. Their drug Mounjaro is really selling well. Blockbuster drug. And you can see it gapped higher, had an inside day, a double inside day, and then was up Friday. As the market has been weak, this has been strong. So I take notice of that. Novo Nordisk, this one is, I like it better than Lilly. I'm not going to get into the reasons why, but this one does have a big, like Lilly, it has a big gap to fill here. And if it pulled back to that 172.97, trading range, I'd be more interested there, which is not that far from 181 to 172, a 9-point move. We'll see if it can fill that gap too. I mean, that's something that to look for. They reported strong earnings as well. Their drugs are selling hot. So 161.89 and jumped up to the low was 183. So it's pulling back, and it got downgraded. But you can see the accelerated earnings in sales 8, 18, 24, earnings 19, 38, 53. So that's trending in the right direction. Novo Nordisk. And another one that was left for the dead, they tried to buy Horizon. The FTC got involved, and this thing has been selling off the entire time, but now it's starting to show signs of life. And AMGN is a big company, 140 billion, so is Lilly and Novo Nordisk. This is a member of the Dow, and it's showing signs of life. So I'm just taking notice of these that are beaten down. This big, well, it's a weekly review. Show the weekly chart, you dummy. You can see this kind of like double bottom type of base here, and it's starting to showing signs of life. It's been up the past 5 weeks, so definitely taking notice of these types of stocks. The banks too, JP Morgan, I got to mention the banks. You can see JPM, little 3 weeks tight, doing nothing wrong. Morgan Stanley, that looks like a little handle on the 21. This is a cup with handle back to the 50, which is a little rare. That's quite a sell-off for a handle. That's shaking them out though. So this is just things that I notice. Okay. Wells Fargo, same thing, cup with handle, and the handle pulled back to the 50, so shaking people out, but on lighter volume. So the weak hands are being removed here. These ones, it's a weekly review, so I got to show the weekly chart. And these ones pay nice dividends here. This is more than a 3% yield. Not as good as the 10-year, but it pays you to hold it. And IBKR, Interactive Brokers, it's another one. going to be on our watch list. This one showing relative strength. It's been up the past 3 weeks. And you can see on the daily there, this consolidation pattern. Yeah, it looks good. And you can see that's got, sales and earnings growth. So that fits the growth profile. Okay, I'm going to get to the oil and gas and just bore you guys to death. I don't really like these stocks because in 2022, this was the only game in town. And you know how well we did in 2022 with the growth stocks. So these are inflationary, but hey, I just got to show you them because they're flashing, they're showing strength. This is the driller group, Northern Oil and Gas. We had this on our watch list recently, but it took off. So it's extended. So I took it off of our watch list, but I just wanted to point these out. These are showing strength. CRC, gosh darn it, Marty, it's a weekly review. Show the weekly. You can see this long period of consolidation, and now it's breaking out. The last 5 weeks it's been up higher. That's CRC, another California Resources, another exploration stock. Permian, this is another one, real slow mover, pays a little yield. If you go to the daily, it's really starting to push away from its base here. So that one looks good as well. GPOR is another one. Exploration, got to go to the weekly. The exploration stocks are looking good. Got to admit, darn it. Anyway, CNX is another one. I could do this all day on the weekly. Yeah, this one looks good. There's just a ton of them, but I'm going to go to the field services stocks. And Tidewater is my favorite in this group. And Tidewater had kind of a strange week last week. You can see the consolidation on the weekly. This is the daily consolidation. It's extended now. But if you go to the 15-minute chart, this is what I'm talking about. If you sit here and watch your stocks all the time, you're going to be more impulsive. And that's why you got to go out and golf, get away from the darn computer and quit watching them. I mean, if you saw your stock drop this much down to 63 to 56, you'd have a heart attack. And then if you sold here at 56 and then a half hour later, later in the day, this thing's up to 65, nearly 66. That's a $10 move. And you'd be really regretting selling that. So sometimes you just got to let them wiggle around a little bit. And if you've bought lower, you can afford to let them wiggle around. Tidewater, anyways, one of our favorites in that group. XPRO is another one that I'm just showing because it's setting up. This is one that's been on our watch list here, and it looks pretty good as it forms the right side of the base. You can see the volume profile coming in here the last 7 weeks it's been up. Okay, so nearly 2 months of gains as it forms the right side of that base. Another stock that I like. I'm not going to show SLB. We're going to go on to the equipment stocks. This one's been on our watch list as well. You could see on the daily, the cup forming, and then on the weekly, it's like a base on base pattern. It's another slow mover with a small little yield. Weatherford is, my favorite in this group. And this one's extended, as you can see here, on the daily, broke out and ran. GTLS is another one in the equipment group that, sold off hard. Here you can see this big sell-off, and now it's consolidated, moving out of this stage 1 base there. So it's one that interests me. Let's say that. The drillers, VAL is one of my favorite drillers here. You can see it's got this cup with a handle. Another one that should be on the watch list here. You can see on the weekly, it had this big move, consolidated, and now last week pulled back pretty hard with volume. It's 5.8% off of its high, and it looks pretty good to me. Diamond Offshore, DO, this one is a little bit extended, pulled back to the 50 out of a breakout recently. And what other one? Oh, Seadrill, that's one I wanted to show. Yeah, another one that on the weekly looks pretty good. It's been up about 8 weeks in a row. So these are showing strength. That's enough of the drillers, the oil, the banks, all the stocks that I'm looking at, the builders, heavy construction, retail, drugs. That's it for today, except for one more thing I have to show you in honor of the great Steve Jobs. One more thing. Just, yeah, I mentioned earlier, when the market's correcting, I trade smaller and I trade faster. And I was looking at IONQ on Friday, and the 21 EMA. I got to go back to the daily. Sorry, the 21 EMA was trading below it. I thought if it got above it, I'd take a swing at this thing. And the 21 EMA was about 1560. So I wanted to look at this stock at 1560, and if it went above that, I was going to put a position on, small one, of course. And so it traded above 15, yeah, right, this bar right here. Yeah, 15 right away. We've traded above its 21. So I put the trade on, and then it came back below, and I said, I'm gonna let this thing go. And it did ramp higher. I'd sold it right away, though. Like I said, in a bear market or in a correction, I'm going to be quick. So from 1550, I traded to about 1660, took a buck. It ran up to 17 something. It could have gone to 18 or 19, but I was out. And that's just the way I day trade when the market is like this. You're going to take what they give me. Because in a bear market or a correction, you mostly, the odds are against you. You got a lot of headwinds. And this thing eventually ended up, near its 21. It traded down and closed just a 0.5% above its 21. So I was lucky to get out when I did, even though it went higher. And I just wanted to share that with you. Not much going on Friday. The market was down. Like I said, this pullback is not going to last forever. You got to be patient. Practice patience. I know it's one of the toughest things for people who like to tinker like me, swing traders, day traders, trend traders. Being patient is very difficult. But like I said earlier, my philosophy is when we're in this uptrend, I want to step on the gas, and when it pulls back, I'm pouring on the brakes here and trading real small, real short. Sold all my laggards, just holding on to. I have about 30% invested in some winners, but I trim those as well. So that's the way it goes. Good luck this next week. This, like I said, this downtrend's not going to last forever. I shouldn't even call it a downtrend. We're in an uptrend. It's a pullback or a consolidation or digestion of gains within the uptrend. And as Willie Sutton said, those AI stocks are being sold because that's where the money is. That's where the profits are. Anyway, have a great weekend. See you Monday. Never give up.